And joining me now for a closer look at what's playing itself out in that market scene is Cobus Potgieter from Southern Cross Capital. Cobus, a pleasure. Good afternoon.
Good afternoon, Olatande. Thank you for having me.
Thank you for being with us. What a week I think it's been. Started off a little bit quiet, but I think the last 3 days have proven to be a little bit more flavorful. Let's start off by taking a look at what we're seeing on our screens today. Miners are doing super well there. I'm wondering if we are seeing an inflection point with our resources counters, Cobus.
Yes, I believe that's what the market is anticipating at the moment. All sort of triggered by fears around escalation in the Middle East, particularly intelligence agencies reporting the possibility of Iranian missile attacks on targets inside of Israel in retaliation for Israeli strikes in Damascus. So sort of a proxy war turning a little bit less proxy, more direct, supporting oil, and of course, uh, you know, ultimately pushing up those prices. And the other commodities seem to follow. First gold, and now the rest. There's some optimism coming back around the industrial commodities as well, specifically iron ore, and platinum as well. So it's a nice broad-based rally. It is a beaten down sector, but it's staged quite a remarkable recovery this year so far, and today in particular.
Then I must ask you what we're seeing on maybe the bottom 10 here. It's retailers, it's telcos, and it's banks. Most of them SA facing. Cobus, not sure what to make of that.
So that's the other theme. Um, that comes down to the expectation that interest rates will remain higher for longer. Of course, all of those stocks are exposed to the credit cycle, and ultimately, I think we were hoping for relief to come sooner rather than later. The expectation locally is for beyond its inflation mandate, the rest of the world, there's SARB in particular, but the rest of the world has to take note of what the Fed does, and we have tended to protect the inflationary outlook by protecting the rand, by managing that interest rate differential between the federal target rate and the SARB lending rate. So that's essentially some of that disappointment, and that's also showing up in both the rand weakness and a little bit of weakness in the bonds.
And I must ask you about the European economy here, because they seem to be in a possibly a better position than what the US economy is in terms of being able to cut. Would it be prudent for them to cut before the Fed?
Look, they have the mandate to manage their own inflation, not to follow the Fed in tandem. And to be fair, that's true of all of us, but we are ultimately influenced by that. So Christine Lagarde has made it crystal clear that they will focus on their mandate. And if you have a look at euro area-wide inflation, it has come back dramatically. We have to, I mean, you sort of point out in the wake of the war in Ukraine, they of course front-loaded a bunch of inflation. So a lot of that is base effect, if you have ridiculous inflation for a short period and you have benign inflation over that, maybe it looks all right over a 1 year period, but over a 2 year period, it was perhaps still out of control. But in any case, the year-on-year inflation across that economy in both call it core and non-core terms is around 2% now. So I would definitely call that under control, even for Europe. And on that basis, they have the capacity to start cutting because honestly, the high rates are um, squeezing the consumers, and we're starting to see those effects. The US economy is the exception. It has been incredibly robust. There are some theories around why the Fed hikes have not had the same effect as they have had elsewhere in terms of softening the economies. But to some extent, it's all interlinked. And Europe moving that interest rate differential around will affect capital flow and ultimately that could actually push the Fed towards cutting as well. So it'll be a positive outcome regardless, from a market perspective. But ultimately now, at the moment, people are certainly more bullish European bonds over American bonds in particular.
Also want to recap on some of the big ones coming out this week. I think the We Buy Cars listing is a big one. Want to get your thoughts here, Cobus, about the landing of this company. The share price was slightly up at close of business yesterday. It looks like it had a softer landing than most companies. What do you make of this listing?
This is the first successful IPO we've had in a while. The offer was 18 and a bit, and
1875.
it's trading
Yeah.
well above 20 now. This was the game in the good old days. A company would announce an IPO, and there would be a listing price, which would leave a little bit of return on the table. And ultimately, once it lists, it'll give you a pop, and the shareholders would make 10%, on the first day. And this is sort of the thesis that played out here, even though the majority of shareholders, of course, received their shares through the unbundling out of transaction capital. Conversely, unfortunately, transaction capital itself is now being sold off quite aggressively. And whereas yesterday at some stage we saw, say, a transaction capital shareholders from 2 days ago, closed at 10 Rand just before the unbundling. The combined value of those two assets that you had the following morning was around 11 Rand 50, which is a really nice 15% gain. That has fallen back a bit today, and that's mostly pressure on transaction capital itself. But you up around 1% now, so your 10 Rand has become 10 Rand and 10 cents. Certainly was a lot nicer before, but a lot of the returns have already come through in the last couple of weeks, where this share has rallied from around 8 Rand 50 to a joint value of about 10 Rand 10 now.
Well, Cobus, it's all we have time for, but I'm keen to get your stock pick. But first, let's take a look at counters that have found favor with your industry peers.
I've gone with TSMC, which is the Taiwan Semiconductor. It is the preeminent semiconductor manufacturer. And I guess there's two drivers here. One is just on the general semiconductor level, there's the inventory cycle is turning. We're at inventory lows and normalized levels across the supply chain. And we see that cycle having bottomed and improving. And then if you add to that, they're at the cutting edge and the bleeding edge of semiconductors. So, for example, NVIDIA has tied up all of their production at that top end for the next 2 years because they are the only ones who can really operate at that level at this point in time. So I think you've got that, you're tapping into some of that sort of AI rollout that's taking place, that infrastructure rollout. And then at the same time, the fundamentals of the broader industry and the business are also improving and turning from here. So I think there's 18 to 24 months of improving earnings on the table for this one.
I'm picking Process tonight, principally for its exposure to Tencent, which is its biggest asset. Tencent's about 90% of the net asset value of Process, and we like the prospects. Tencent's recent earnings announcement was very positive. Operating profits up 26% year on year. We think that they can continue to grow earnings above 20%. I also think that the US tech stocks have kind of been the only game in town for the last 10 years. And I think that if we see kind of earnings starting to slow a little bit in the US, people are going to look to reallocate some of their portfolio, and maybe you want to own a cheaper tech stock, and Tencent is stands out. It's derated, and they're trading at quite a wide valuation gap to the US tech stock. So I think they're at the bottom, and I think that a shareholding in Process will do well from these levels.
But I'm going for Anglo American Platinum. I mean, the platinum price itself is now approaching $1,000 an ounce, and it got there beginning of January, then fell back. So we'll see whether that's maintained or not. Anglo American Platinum has also bounced down to 650 2 or 3 times, over the last couple of months, trading now at about 820. I think we're in for a good commodity run. So this is not a call for the next week or the next month. Yeah. It's definitely a call over the next 2 to 3 years. I think we can make a very, very rewarding return from the platinum shares, and I'm going for Anglo American Platinum. rather than the more marginal ones like Northern and Impala and Sibanye, etc. If I'm wrong, Anglo-American does give you a little bit more protection on the downside because it's one of the lower cost producers.
All right, Cobus, keen to get your thoughts on some of those counters, TSMC, Process, and Amplats.
I like all of them.
Okay.
TSMC is maybe somewhat in the price, but again, at the bleeding edge, we're talking the really small semiconductor fabrication side. They are very well positioned. They have the best technology, somewhat exposed to regulatory risk, and the sort of American move to onshore semiconductor manufacture is a bit of a risk, even though they are putting up their own fabs in the US as well. We expect the American players to be somewhat preferred in that space, even though technologically they're not quite there yet. But I like it. I agree. They are in for a good run. I'm not sure how much of that is in the price, but this is akin to selling shovels during the gold rush, which is maybe a better play on AI than buying Nvidia at these sort of lofty valuations. I like Process as well. I think we've discussed this one. I'm quite bullish on Chinese equity from this level, and Tencent certainly. There's been a bit of a shift from the government's perspective as well in terms of accommodating these gaming companies, and they are very very attractively valued. And we think those are nice. We hold that as well. And then, of course, Amplats, which, the comment that's the best pick of all, frankly, given the timing, except it wasn't a short-term trade, a long-term trade. It was a short-term trade. It's up to 863 now, not 820. So obviously that particular call came off quite quickly. We've yet to see if this does sustain, but generally, I think the industrial metals are do have a bit more of a rosy outlook now than they had perhaps 6 months ago, and I like that call as well. So actually, I like all three calls, generally speaking.
And what's your stock pick this afternoon, Cobus?
I'm gonna stick to the same kind of theme. African Rainbow Minerals, ARI on the JSE. That's a diversified industrial miner. They do coal, they do particularly iron ore, they do platinum, and they even have some exposure to Harmony. They have a significant holding in Harmony Gold. So it's a nice diversified call. We're getting both the precious metals and the industrial exposure, and it's cheap. I mean, it's on a PE of about 5.5. The dividend yield, I think, is higher than that even, which is in the resources space. It's hard to find value like that. It's a well-run business, and it's my favorite resources play at this stage.
Well, always a pleasure having you with us, Cobus. Thank you so much for your time this afternoon. That was your midday markets update with Cobus Potgieter from Southern Cross Capital.